Greetings, everyone. This is RKrivo with our chart drill down for May 11th, 2016. A few minutes ago, I checked on the trades that are in the trending pip count, which I tweeted out on May 9th. They're up roughly 300 plus pips, a few pips over 300 when I checked. And for the record, these are the same trades that were up about 500 pips a few days ago. Now, as you know, if you've been around trading in the markets for any length of time, markets ebb and flow. And it's our job as traders to identify the trends, find an entry point, and ride along in the direction of the trend while using trade management as needed. And to that end, we've adjusted our stops on those trades to limit our risk and closed out portions of the trades to lock in profits. My objective in each of these drilling down the charts videos is to show you how I go about identifying the strongest trending pairs, those that are more likely, though not guaranteed, to turn into winning trades. No guarantees. If you have any questions about any of the indicators I use on my charts or why my charts are set up the way they are, please refer to the May 11th last year YouTube videos entitled Chart Tutorial for an explanation. And if you still have questions, email me at RKrivoFX right down here at gmail.com. And also, if you're not, follow me on Twitter at RKrivoFX. Now, remember, these charting drill downs are for instructional purposes. Any of the setups that I show by no means guarantees that they will ultimately turn into a winning trade. Let's take a look at our risk disclosure or risk disclaimers here. And trading foreign exchange, significant levels of risk. Only trade with risk capital, and that is money that you can afford to lose. High degree of leverage can work both ways. And the content provided, as I mentioned, is for informational and educational purposes only. Okay, let's take a look at the charts here for a second. Hang on. Okay, I've got the charts in view, and as you may recall, I use a strong weak currency analysis to point me in the direction of the pairs that are in the stronger trends. That's where I like to start my analysis. And should you want to know more about that being the strong weak analysis, email me at RKrivoFX@gmail.com. And the most recent strong weak analysis indicated that the yen was the strongest currency and the Australian dollar was the weakest. So that's my first stop as I drill down the chart. So given that piece of information, here are the Aussie yen charts. And the way I have them set up here are weekly, daily, 4-hour, and 1-hour. I use the Donchian channels as my primary go-to strategy here. And what I can tell as I look at the longer term charts here, the weekly, for example, price has taken out the lower Donchian channel on the weekly and has oscillated quite a bit, many hundreds of pips in those oscillations, but it has yet to touch the upper Donchian channel, and it may not. So given this, we are in an open sell scenario on the weekly chart. We are also in an open sell scenario on the daily chart because it's taken out the lower channel, and since it's done that, it hasn't touched the upper channel. So given that, these are the two charts that I use, the weekly and the daily, to determine the direction that I want to trade the pair. So given that, I'm looking for trading opportunities on either the 4-hour or the 1-hour chart. Either one is going to work. That doesn't mean it's going to turn into a profitable trade, but the setup is there on both of them right now. It's a little closer, obviously, on the 1-hour. What I want to do is wait for, according to pure Donchian strategy, I want to wait for price action to have touched the upper channel in a downtrend, touch the upper channel, and then if and when it takes out the lower channel, that's my entry. So looking at the 1-hour chart, I would be setting my entry alarm at maybe 79.11, right around in there, maybe a little bit above that to give me a heads up, maybe 79.20. Set an alarm, a price alarm, and then I can come back and check the currencies at that time and see, is the Aussie still weak across the board? Is the Japanese yen still strong across the board? Because that's going to lend more credence to my idea about selling this particular pair. So on the 1-hour chart, I'm going to get in a little earlier, which would be at roughly 79.11. That's the lower Donchian channel. So that's where I'd set my price alarm. if you're more aggressive and you just, somebody wants to set an entry order right there, somebody can certainly do that, knowing that it is a more risky way to do it. Just set an entry order there without checking to see what's going on. Now, on a 4-hour chart, I would set the price alarm at maybe 78.18, right around in that particular area. Now, a couple other things that I like about this particular setup here is if I look at the weekly chart here, where I get to see how much room the trade has to run, you can see the line, that red line that's on the cursor there, that's right now on the lower Donchian channel on the weekly chart, and follow it all the way across to your left. And it's about in the middle of this particular candle. So if I see how much room is left in that candle, roughly it's about maybe 240, 230 pips. So just because a trade and price action has room to run doesn't mean it in fact is going to do that. So I look to see, does it have the room to run? And in this case, it does. Again, it doesn't mean that it's necessarily going to do that. But if it doesn't have the room to run, I'm not likely to enter the trade. In this case, it does. So I'd be looking to around 78.14 for a price alarm, 78.20. And if I'm going to trade off the hourly chart, I'm going to set that price alarm, maybe like I said, at around, maybe 70, 79.17, 17.20 to come and check the situation out to see what's going on at that point. Okay, let's go to another pair here. And in this case, on the strong week analysis, the next pair that I wanted to check out based on that was the New Zealand yen. There's going to be some similarities here, but the main thing I want you to take away from all this is price action is taking out the lower price channel. On the weekly, it's taken out the lower price channel on the daily. So we're looking for opportunities to short the pair. And in this situation, the setup is very much the same. On the 4-hour chart, we'd be looking for perhaps setting a price alarm just above the 72.54 area, and then come back and see, is the New Zealand dollar weak across the board? Is the Japanese yen strong across the board? And in this situation, the lower price channel is at about 7,300 exactly. So maybe set a price alarm at, let's say, 73.10, 73.15, something like that. So again, I looked at the strong week analysis to guide me in the direction of the pairs that are the strongest trending. Now, just because a pair is in a strong trend doesn't mean I'm automatically going to jump in. And like I say, I'm looking for shorting opportunities and just short it willy-nilly, at any place on the charts. I want to wait for something to happen that's going to give me more of an edge. Right now, I've got a trading edge based on the fact that I see downtrend, room to run. Let's check that out. We've got room to run here. We've got roughly, if that's the low, let's see, we've got roughly on this one about 270 pips of room to run. So we've got that. Those are trading edges right there. But I'm not going to just jump in right here, for example, on the 1-hour chart. I got a 200 period moving average, simple moving average that I got to get by first. And then I've got to get by all this chop going down here. So I'm going to wait until it takes out a lower Donchian channel before I even think about getting into one of these trades, because it may not take out the lower Donchian channel. For example, let's take a look at another pair, pound Aussie. In this situation, pound is strong and the Aussie is weak. So on that basis, we see the pair is going up. In this situation, price action continually took out the lower Donchian channel on the 1-hour chart, but now it's making higher highs and higher lows. I'm sorry, on the daily chart, it's taken out the upper channel, higher highs and higher lows. Slow stochastics is above 80, which means it's overbought, and that's fine in this situation. A trade currency pair can stay overbought for quite a long period of time. But what's different about this one is on the weekly chart, it hasn't taken out the upper Donchian channel yet. It may not. Now, this upper Donchian channel is going to get lower and lower. These two may converge. It may take out that upper channel. What I like about what I see here on slow stochastics, indicating that this may have more legs to the upside on the weekly chart, is slow stochastics has angle and separation to the upside. So potentially, the more the daily chart goes up, obviously, the more this is going to make the weekly chart go up. So in this situation, I like the entry on the 1 hour chart because it has touched the lower Donchian channel when and if it takes out that upper Donchian channel at 1 point, let me go to the ask, at roughly 1.9740, 97.43. That's where I can set a price alarm to come back and check and see how things are going. And in this situation, we don't have much of a pullback on the 4 hour, so I'd be looking at the 1 hour chart to be doing the trading. And again, I'm not going to try to jump the gun. Some people say, well, it's not going to go any lower than this. Why don't you just go long right now? Well, the problem is you're buying as price action is moving down. That's not a good thing. You're buying when the sellers are in control. It may pause here for a while and continue to go down. We don't know that. But there's a lower probability of that continuing to happen, meaning going to the downside, price moving to the downside, if and when price action turns and takes out that upper channel. That says much more convincingly that the buyers on this pair are now back in control. Here, prices move down, the sellers are still in control. I don't want to buy in that particular situation, again, based on Donchian strategy. Let's take a look at the euro yen currency pair. I looked at that one earlier, and that had some potential interest for me, for you folks today. Okay, euro's weak, yen is strong. This is why the pair has been moving down. And on the weekly chart, we've got lower highs, lower lows, continually taking out that lower time frame channel. And so we've got a situation here too where it's taking out the lower channel, hasn't touched the upper channel. So both my long-term charts are in what I call open sell, an open sell scenario, open sell position, meaning I'm looking for selling opportunities on the lower time frames. And if I go down here to the 1 hour chart, see it's taken out the upper channel, may continue to move down, but this would be where my entry or my price alarm is going to be at roughly 123.29. And if we look over here, we can see that roughly 123.29 on the 4 hour chart. Let's see, I'm sorry, is right about there. So on the 4 hour chart, we could be more aggressive and we could get in there because we have about 129 pips of room to run in that scenario. We also have slow stochastics with strong angle and separation to the downside. It hasn't fully crossed below 80 yet, and nothing happens until it happens, but it's giving an indication, but I'm not going to wait. I'm going to wait until that indication follows through. I'm not just going to jump in again randomly, willy-nilly, or whatever, until I get more of a confirmation to ensure that my trading edge is more in place, shall we say. So one could enter off the 4 hour chart. At that point, stop would go above the upper Donchian channel, or one can choose to enter as price action on the 1 hour chart goes below roughly 123.27. That would be the area that I would set my price alarm. And if ultimately the trade is entered, I could put my stop above the upper Donchian channel. This is more, the 1 hour chart is more true Donchian strategy than is the 4 hour chart. We're adhering to Donchian strategy here on the 1 hour. We're being more aggressive by entering on the 4 hour chart as price moves down in that area. We've got a good indication from slow stochastics on the lower time frame charts that momentum is poised to move to the downside. Being poised to move in a direction and actually moving in that direction, two different things. So that's why I like to wait for the confirmation. Okay, well, I thank you for attending today. And again, if you have any questions on this particular chart drill down or any of the videos that you see on the YouTube channel here, please feel free to email me at RKrivoFX@gmail.com. Look forward to hearing from you. Bye now.